Let's check back in and look at the markets right now. You know what? We should blow out the commercial break. Can I do that? Because I'm telling you, this is a big sell-off as it pertains to near historically, what we've seen lately. It has been more than a year since the S&P 500 fell a full percentage point. Right now, we're not at a full percentage point loss here. We're just almost there at 0.90. But if we don't hit down 1% for the S&P, which is lower by 25 points, that will be the longest stretch we've had without seeing even a 1% tiny correction since 1966. This is moving on the wires. Hedge fund giant Renaissance Technologies, one of the most successful of all time, says there's a significant risk of a correction and that it's preparing for possible market turbulence. This is the VIX, or the volatility index, is jumping right now to the highest level in more than 5 months. Okay, we've just got a few minutes left in the closing bell. What does the current market move mean for tomorrow's opening bell? We have assembled some traders back in action. We also have Nat Alliance Securities Global Fixed Income Head Andy Brenner, who's been watching all of this. First to Matt Cheslock, what kind of action are you seeing on the trading floor with just about 6 minutes left to trade?
You know, what's funny is we're not seeing the huge numbers that we expected maybe on the sell side going into tonight. So, you know, as Charlie mentioned, maybe you're starting to see traders take a little shot in going into this speech tonight and saying, you know what, let's get long a little bit. We got a little bit of a discount. Let's give this a shot.
Phil, Flynn, we saw oil even falling. There really isn't much of a safe haven at all out there.
There really isn't. And I think if you look at why oil is down, it's because the stock market is down. You know, the energy stocks were down. And one of the biggest reasons why oil prices have been so strong is the stock market's been strong. It's signaling a strong economy and a sign that the strong record demand that we've been seeing here in the United States and abroad is going to continue, and that's very strong. Though there are a lot of headwinds this week. You know, President Trump's speech, there's some worries about that. There's some worries about the Apple news being investigated by the feds for slowing down software. We've got this insurance story that hit the insurance stocks with Berkshire Hathaway and Citigroup and all these companies banding together to try to fix the healthcare problem.
Amazon, yes.
And the Fed. Thank you, JP and Amazon. And then, of course, later on, you've got the Fed meeting this week. So I think a good reasons to take profits. And considering the size of the run-up in both stocks and in the oil market, I think we have to put it in perspective. It's really not that big of a pullback considering the move up.
Although, Andy, when you hear that the guys over at Renaissance, and I'm talking about the one run by Jim Simon, who is one of the all-time geniuses, is saying, watch out for a very big correction, and that they're wrapping themselves in Iron Man Teflon somehow, some way, in some type of instrument to prepare for that. What does that send as far as a signal is concerned?
Liz, we're going to see a correction in the equity markets. As I said earlier, the bond market's already in a bear market. And I think tomorrow, I think the president will do great tonight. But I think tomorrow the two things to watch are the Fed announcement, and I do think they will say something about changing the monetary policy a little bit. They're certainly not going to raise rates. And one of the things that is keeping us in a little bit here in the bond market is the fact you're going to have month-end asset reallocation. Once that's gone, I think the bond market really breaks down on Thursday in front of the unemployment number Friday.
Oh,
so that's
Thursday.
What you got to watch out for.
Yeah, and by the way, the Fed is meeting today. They're supposed to at least come out with how they see the picture tomorrow. I think we've got Art Hogan in the chair. Let's bring him into the conversation. He's Chief Market Strategist, Managing Director for B. Riley, FBR. Art, you have watched these markets year after year, and you tell me what you make of this and what our viewers watching you right now should think of a 319-point drop in the Dow.
Yeah, Liz, it's interesting. This is very normal market activity. We're just not used to that because we haven't seen much volatility over the last 12 months, and certainly for the first 3 weeks of January. We've been unidirectionally higher. That process continued into Friday. We had all-time records. But I don't think anybody thought that we could annualize the up 7% for the S&P 500 in the month of January throughout the course of the year. We'd be up 85 or 90% at the end of the year. This is a normal activity. Now, it's being caused for the right reasons. We're looking at the yield on the 10-year, almost doubling over 2 years and breaking, like you said, the 266, now flirting with 271, 272. That's important. That's a double over the 2-year process, but it's certainly up significantly and got there quickly. But is it happening for the right reasons? Are we seeing economic growth that's driving that higher? Are we getting a whiff of inflation? I think all those things are going to be good for the markets. At the end of the day, corrections are normal like this, and it's just something that we just haven't gotten used to over the last, call it 12 months.
Okay, two and a half minutes before the closing bell rings. Matt, can you venture to guess What happens tomorrow, and what role does the president in his speech tonight play in calming things a bit?
Well, hopefully he doesn't go off script or doesn't do anything that we're not expecting. This might actually make him think about his tone a little bit more, because it's going to have an effect tomorrow morning. But as I said, all eyes are going to be on this, evidently. But there are other things, as was mentioned. There were earnings. There's the unemployment number at the end of the week. There's the Fed. So it's not going to be the end-all, be-all, but it's going to set the tone for the morning. So if we can get a little uptick on this close, maybe it provides a little bit of solace for any of the bulls out there.
Andy, what happens to the 10-year yield overnight?
Overnight, I think the 10-year yield stays in track between 270 and 274, and I think you have to wait till the asset reallocation tomorrow for month end. Then I think the 10-year goes to 280 on the way to 3%.
Well, it's 273 right now for the 10-year, just keeping people up to date on that. Art, are you buying anything on a day like this? People have been waiting for a pullback.
Yeah, people have been waiting for a pullback. I think you've got time to look at a diversified industrial like a Carlyle or a Gentex or a Select Energy, WTTR. I think these are companies that are going to thrive in a strong economy, this reflation trade. We're very excited about all three of those names. I think that's the trade, and I think the yield on the 10-year, 274, is the next level of resistance. If it holds there for a little bit, I think it'll be a little while before we have to worry about that a whole lot.
Yeah, Gentex, Select Energy Services, Carlyle, those are Art's picks right now. Phil, we're hearing the cheers because we are now 45 seconds to go before the closing bell on a pretty tough day. But you come back in, do you dive in, or do you wait and see how the opening happens?
I think that if you get a lower opening, you buy it right now. Listen, I think Donald Trump is going to deliver tonight. I think he's going to strike a positive note for the market. You don't want to bet against Donald Trump. Anybody who has been a big loser in the market.
That is very true. And the markets right now, yes, we are seeing losses. Folks, I need you to keep this into perspective, though. It's a measly 1.33% clip off the Dow, and even less than that for the NASDAQ. And yes, it looks like the S&P will be lower by 1 full percentage point. We haven't seen that in quite some time. That'll do it for the Claimant Countdown. I hand it over to After the Bell.